Grab yourself a beer, PF?
I did.
Cheers. Oh, you're doing the old beer in the mug thing. People think you love coffee, but boy, they just don't know.
I have no idea.
All right, ladies and gentlemen, welcome to this holiday edition of Rein It In. We are talking about nothing with regards to Christmas, the holidays, but we do have a lot to talk about, Patrick, with regards to the economy. Tiff Macklem, his recent speech and interview, which was over an hour, the possible and impending recession. What does it mean to us as investors? There's a lot to talk about on this episode of Rein It In, so strap in, get ready. It's going to be a ride.
Let's do this.
All right, Patrick, I only have 2 sticky notes today, but they got, as you can see, a lot of different notes on the sticky notes. So there's a lot of topics here to cover.
Okay, but there's your frugalness again, only using 2 sticky notes as opposed to 5 or 6. I mean, that's like a waste of sticky notes.
Listen, I'm an environmentalist. You know,
I'm hilarious. I'm hilarious. Okay.
You are funny. Is it that half a beer you had? Is it getting to you already?
Exactly. Okay, let's go. Get to work.
Okay, let's get going. We got lots to cover in this episode of Rein It In. You want to start with the Tiff Macklem speech? We watched, he did his end of the year speech, which came with an interview. The whole thing was over an hour, which is quite a bit. There's actually, I thought it was very, very good. Where do you stand on Tiff Macklem? I'm a Stephen Pola's kind of fan. Just because I read his book and I thought his book was very good, that made me a fan of him. Where do you stand on Tiff Macklem? Let's just start there.
Well, what do you mean? Where do I stand?
Listen, you have opinions on all things politics, Trudeau, you know, all the I just swore. I just said the word Trudeau. I'm sorry, Patrick. But anyways, where do you stand on Tiff Macklem is my question.
In all honesty, I think Tiff Macklem should have been fired.
Wonderful. Okay.
What else I got to say? I don't think Tiff is doing a good job as the governor of the Bank of Canada. I think he dropped the ball, and I think there's a price to pay. You know, it goes back to, he should have been like an Elon, like somebody should have been like Elon Musk, when Elon was having the interview with Joe Rogan and he fired somebody like on the spot that was with him, one of his executives on his team. He's sitting with Joe Rogan in an interview and she made something up around like, whatever. She made an excuse and he goes,
"You're fired."
That was it. Fired her. And that's what I think should happen with Tiff. So that's my opinion. So,
you know what? I love it though, because I do. So let's talk about this because we have a lot to talk about with regards to his end of the year speech. But I like where you're going with this message, which is, there should be some accountability is the point, right? If you and I do a terrible job, several things happen. Number 1, we either get fired. Number 2, we lose clients. Number 3, we lose money. Number 4, we lose our business. Number 5, we lose employees. Like there's a host of accountabilities that as business owners, as real estate investors, we're constantly dealing with. My question is a guy like Tiff Macklem and Tiff specifically, but a guy like that in that kind of position, what kind of accountabilities do these guys have?
Well, it's interesting is that in this particular speech that we're talking about today, that we're going to have some little bit of review on, he actually admits that they made some mistakes. They did some things wrong, whatever that.
3 mistakes, he says.
Yeah. And so at the end of those 3 mistakes, and he should have either said, and because of those mistakes, I'm going to step down as the governor of the Bank of Canada, or Freeland, who is his boss, really, although she's not supposed to be. That's a different conversation. Should have walked in the door and said, "You're fired." Hey, that would have been like a Donald Trump move. "You're fired."
Good idea. I like it. I like this. I like this new Patrick we got going on.
In all seriousness, and I'm not joking about this. I think Tiff Macklem should have been fired. I think that he admittedly has made mistakes, and he's admitted those mistakes more than once. And ultimately, he looked in the camera in 2020. He told the whole country that, rates will not go up for a very, very long time. It was us, go ahead and encourage you to spend money, and they're bringing the rates down. They want to get people out. They want to keep the economy moving. Got it. Honest mistake, I guess. But at the end of the day, understood. But having said that, JG, you and I, how many times did we have conversations saying that this is ridiculous? We didn't agree then, and I don't agree now. In hindsight, I definitely don't agree. But ultimately, they dropped rates, got it. They were trying to get the economy going, understood, given that it was a global pandemic and a global lockdown, and they needed to kind of hedge our bets, understood. Easy, given that we've never been through a pandemic before. But 8 months, a year at the most into that pandemic, everybody could see what was happening. Everybody could see and was talking about supply chain breakdowns. Everybody could see the inflation, the quantitative easing that was happening, driving money into the and liquidity into the market. How is it that the common folks, common business people, just doing their life, could see the potential and the actual trajectory and path to inflation? And the governor of the Bank of Canada, and let's just throw Freeland under the bus while we're at it, could not see it. It actually infuriates me. And here we are today, and inflation carries on. Now we've got interest rates going up. Housing prices are going to come down. We got people with interest payments and line of credits that are doubling. Like it makes me crazy that we have to deal with this. He should have been fired.
You're fired.
Now that I got you all riled up, which is perfect. Now I want to know, what did you think about his speech, though? The end of the year speech, it was like, it was, I thought, a very good speech, because I thought he said some very definitive stuff. And if there's anything I don't like, is when they're very, on the fence and they're very political about it all. I thought he was very definitive. And I agree with you. Okay. I think there should be accountability in these guys. And I think that if you mess up, you should be accountable to your mistakes the same way we are as business owners. So I agree with you there. But on the flip side, I like the definitiveness of his speech, and I thought that was very good. What are your thoughts?
He said something in that speech that really worries me. And he said, we're going to look at the data, and then we're going to have our judgment. Then we're going to also engage in our judgment. I don't know the exact language of it, but he literally said that. Data and our judgment of the situation. Oh, well, that gives me a lot of faith and a lot of confidence, given where his judgment has led us up until now. So out of that whole speech, he should have resigned. He didn't. It's great that he was all humble and he made the mistakes he made, or he admitted to the mistakes he made. Got it. But he's talking about the data going forward. Here's my concern, is that he needs to stop raising rates now. I mean, done as of December, last rate, and just sit back and pay attention to what's going on, what's percolating under the surface, because we know that there's a lot of things that an increase in interest rates won't change, not the least of which is a breakdown in supply, not the least of which is a change in the oil price. Two big ones, as an example. China's coming on board, so we're going to see stuff come in that could actually be deflationary in some areas. So the point of it is this: he needs to not raise rates and just let things unfold, and so that the lag can catch up to what the decisions he's made so far in increasing rates. And I think at the end of the day, JG, we're going to see the economy slow down. I'm still not convinced we're going to go into a full-on, what we would call a traditional kind of recession, but he needs to just sit and let things unfold.
He does say that in his speech, that he expects the first 6 months of 2023 to essentially be zero growth, meaning zero GDP. Not saying negative, not saying recession, like you said, Patrick, but he has specifically stated zero growth in the first 6 months. That's his expectation. I thought, again, definitive. You don't hear typically the governor of Bank of Canada making those kinds of statements. At least I certainly don't usually get that. This I thought to be very definitive. I like that part. Not defending him, by the way. Don't let me get you all riled up even more. I kind of want to do it just to piss you off. That's how we roll.
You already are.
So Patrick, one of the things Tiff Macklem mentioned in his end of the year speech was how, with the labor shortages that are happening, and I want to talk about labor shortages, pricing is going to continue to stay elevated. This is going to stay in inflation because of the reshoring, onshoring, stuff coming back into Canada, stuff coming back into the US. That's going to keep prices elevated. That's what Tiff was talking about, or hinting towards. Actually, more than hinting, he actually said those words in his speech. Now, I know we all know your opinions of Tiff Macklem, so I don't want to keep going down this road, but I do want to get your thoughts about the labor shortages, though, specifically because you're a business owner, I'm a business owner. As real estate investors, we're all business owners. What are your thoughts on the labor shortages, and where is this going to go, and how are we going to fix this? Because right now, as you've mentioned many times, we are in an unhealthy state of labor. It's too tight and it's too difficult. What are your thoughts?
Well, oh man, there goes so many places to go on this particular conversation. So JG, as you know, that we could share is that manufacturing in Canada is on a decline, by the way. So we actually had a conversation about that earlier today. So when we come to labor shortages, it's actually, okay, if we got labor shortages, why is it that manufacturing is on the decline? Now, we know that they're actually having challenges filling positions, but here's another side of the equation. So we all agree we need immigration, but underlying, there's something percolating under the surface, if that's the right word, but ultimately we have to be aware of, and I'll shine a light on it. Nobody else has talked about it. I'm going to talk about it. And that is that in the immigration that we have coming in, we're running into one fundamental problem. And that is the immigrants coming into the country, they bump up against a few things. Number one is, which is the weather. And I kind of say that tongue in cheek. It's freaking cold here compared to where they're coming from. Most from India, by the way, but that's not all. But the weather is a factor. And some are turning around and going home just because of the weather. But that's not the major issue. I joke lightly about that. But the real issue is that they're coming here and they're finding that the positions that they're being offered are, in fact, not the equivalent of the roles that they left when they left their country. And I'll give you an example of that. They may leave, and let's say they've got a team of 100 IT staff where they came from. They come here and they're going, okay, my option is to drive Uber, or my job is, a minor supervisory. So they're going into positions that they're overqualified for, but more importantly is that their salaries are not accommodating the cost of living in Canada. So they're coming into Canada. They're not being paid the salary that really is commensurate with their role, like with their skills, and then not enough to actually thrive or even survive in Canada, given the cost of living here. And then they have to add to that factor that if they want to go home once a year because they're leaving their families, that's very difficult to do. And JG, you and I know that people that immigrate into Canada, they hang around for a while to even find out culturally where they want to live. Now, that's a bit of a sidebar, but the point is that beneath the surface of all this immigration coming in, there is a kind of maybe an elephant in the room, and that is people turning around and going back out again. And as importantly, as big as the list is of people want to come into this country, it could start to go down if the realization that's being pushed out in social media, by the way, by immigrants into Canada who have been living here for a couple of years, they're actually pushing out YouTube videos or pushing out social media that's going, hold on just a minute. If you're coming here, you better be prepared for a few things. And that's what's happening. So it's just a little bit of an underlying current, if you will.
If you're going to come to Canada, you do need to bring a winter coat. That is true.
And boots, true. Maybe some Uggs.
Yes. Maybe. But listen, of the three factors, because that's what you just named three factors. One, the weather, which hasn't changed. It's, if anything, it's gotten warmer over the years. So
yeah, apparently.
Apparently, exactly. So that shouldn't be a factor. People should know. Number two, this concept of coming in and coming into the country and you're kind of overqualified and you come here and you got to start kind of back. And that's always been an issue, Patrick. That's not a new thing. That's always been an issue. In fact, I think there's a lot of changes that have happened over the years where it's gotten better. I'm not saying it's gotten better. I'm not saying it's there yet, but it's gotten better. But the third factor you talked about is a relatively new phenomenon, which is the cost of living is higher than it's ever been by some standards. And as a result, it is tougher to come into the country with nothing for sure and then start a family. That being said, though, Patrick, the people that do come to Canada, one of the ways they get their visas, as you know, is they have to have a certain amount of money in the bank account and bringing it into the country, which, by the way, I think is $250,000 plus. So a lot of these people can afford. And I think you're right that there's some of this, and I think you actually said it right at the end there, which is the social media is proliferating some of this stuff because, that didn't exist back then. Now it does. But the fact is I think that we've never had so much immigration in this country. And as we have bigger and bigger numbers, we're going to have more and more of this stuff, which is just a side effect of bringing more people in the country. And there's other side effects too, which I know you want to bring up, Patrick, but there are a lot of side effects from so much immigration.
Yeah. And not the least of which is the stress and strain that it's putting on our infrastructure. We talk a lot about healthcare. That's always a conversation in Canada, has been for a long time. Well, bringing 500,000 immigrants a year into the country actually adds to all of that. So that's another layer of challenges just overall. And that's a very important part of our infrastructure, which is in fact our healthcare system.
I hope that we bring more immigrants in because someone's got to pay for this healthcare. I agree, it's a stress on it, but someone's got to pay for it. And you baby boomers, you're taking up all of the healthcare and you're not contributing anymore.
Listen, I go to the docs once a year just for a checkup. I'm good. I'm healthy.
I didn't say you specifically.
Well, okay, but you can't say boomer and have a conversation with me and not imply. Okay, so,
But I want to come back to my question because you haven't answered it. So let me come back to the question. As a business owner, what the heck are we going to do as business owners with these various labor shortages? And what I mean by that is the labor market is very tight. I have my opinions on this, by the way, which I'll share after. But, a lot of people are having a difficult time hiring. And if you can't hire, you can't grow. And if you can't grow, you can't keep contributing to growing GDP. That's the bottom line, is your revenue of your businesses and my revenue from my businesses contribute to the GDP. And we have to keep growing our businesses if we're going to contribute to that GDP. What do we do? And what are you going to do as this labor gets tighter and tighter and tighter?
Well, something interestingly enough, a friend of mine pointed out to me that I've been through 5 different kind of cycles of recession, highs and lows. Coming from Alberta, I realized what labor shortages can look like when times get like they are today, where unemployment is very, very low. I've said many, many times, JG, is that, this 5.1, 5.2, 5.3, as much as that speaks to, what seemingly is low, well, it's low unemployment. You'd think that's a good thing. It's not a good thing. And it's not a good thing for a number of reasons, not the least of which is, for example, manufacturing. They can't produce because they can't get the labor to fill. Construction, it's slowed down, but even if if it was even back to where it was, they couldn't keep up. They weren't keeping up. Now, then we look at, services, and even in the retail industry, guess what? You can't get people in. This is not a healthy unemployment rate. So I know we're a little bit ahead of in a conversation we wanted to have, but one of the things that Tiff Macklem has said in the past is that we need to see unemployment go up. We need to see it, go to 5.5% and 6%. He's saying we need to soften this employment market, which I 100% agree. What are we going to do as business owners? There's not much we can do. We do the best we can. We say, well, we'll pay you more money. That sometimes works, but not always. Working conditions become a big issue.
By the way, that's how inflation becomes a permanent problem, is what you just said right there.
Yeah. But here's the fundamental about it is around unemployment, low unemployment. Aside from people get wages, there's working conditions, and there is nothing fun about working in conditions where you're short-staffed, you can't complete tasks that you're set out to do, and there's a constant churn of people on your team. Those are not fun conditions to work in, and I know some are experiencing that already, and they could actually get worse. So the point of it is that, when it comes to managing costs, we actually do need unemployment to, I guess, go higher, as in we need it to get up into that 6% range. That's what I recognize as a healthy unemployment rate.
I think the only thing that's going to solve this problem is technology. I think that this is where technology has to help eliminate some of these jobs. It really does. And I always laugh at people who say, oh, this technology is going to take my job. Geez, Louise, you can have any friggin' job you want nowadays. We need technology to help us with the shortages. Forget taking people's jobs. We need the technology to replace some of these menial jobs so we can move people up in the brackets of income by them getting better jobs. That's what I think.
I mean, you're not wrong. I mean, you're opening up a bigger conversation we don't have time for. But at the end, and I don't disagree with you, by the way. But again, some of the labor that we come in, so we can be far more robust with services. And some of those services are IT services that we are actually selling outside of the country, and we're providing services for, and specialties outside of the country. But I want to go back to the productivity side of things, which is our exports are marginal at best. We sometimes are negative and positive import-export. Our manufacturing has been decreasing for a number of years. So, we also have to have those jobs. So if China is, in fact, if we're going to kind of go away from, importing a bunch of China goods because of what's happening over there and what we're now taking on, we need other types of labor, other types of skilled labor. It can't just all be IT. So, it is a very complex issue. And when we're looking at it today, when we look at it today, we know that we have labor shortages, and we have labor shortages kind of right across. It's a very broad-based problem that we're facing in terms of industry.
But back to the technology. Listen, let's just take TVs. Okay, let's take a stupid example, but it's a real one. You're going to onshore TV production or some other production of devices. Let's just say, right? You're not going to do that with people. You have to do that with technology. There's no damn way anybody in this country is going to work for the price that we need to work for in order to afford a $600 cell phone. Without that, hey, look at that. Isn't that cute? Look at my kitty cat.
That's cute.
Anyways, there's no way we can produce incredible devices at that price without either A, way better technology, or B, offshoring. It just ain't happening.
I understand, JG. And I'm not saying that that isn't a good point. It is a good point. But we have to come back to some of the foundational things that and how we operate. Now, again, technology will replace it. But I tell you what, if you own a hotel or if you're a part of a hotel chain, you can't get people to look after your hotel room. What's normal now is, no, we're not making up your room. You're going to look after yourself. We're going to charge you the same, but no, we're not going to change the sheets. We're not going to make your beds. We're not going to have a night turn down. Like these are all labor shortage issues. And as much as technology might roll up to your door with lunch you ordered, the room service you ordered, that isn't turning down your bed and washing your sheets. So
it does happen. There are robots in hotels now. It does.
Yeah, there is 100%.
I know it is. Yeah, I'm not kidding. So, okay. I was hoping you were going to go into the EV conversation. I was really hoping to have this because now Tesla has launched their truck, their semi truck, their transport, which I think is going to revolutionize many things. You have your opinions, which don't make any sense. But if you go back, and I think that my point why I'm bringing this in, being funny, is because if folks, if you watch the show on a regular basis, which we know you don't, but hopefully you'll start. But if you go back one episode or two, we talked about the Tesla announcing their new semi truck. Point is this, Patrick, that's the kind of thing where we already have a huge shortage in truckers. We know that. Everybody knows that. Transportation cost is a massive part of the cost of materials and cost of stuff in this country. That is going to help and should help do two things. Number one, free up some labor. And number two, eliminate the trucker shortage. And number three, bring down the cost of transportation. Technology and EVs solving a problem.
Well, you're delusional. Okay. So here's a fundamental problem we got with EV. I'm all over technology. I love it. But there's some realities that we're dealing with, not the least of which is that there's not enough lithium and there's not enough silver to build the vehicles that they want to build. So as much as we're going to have, this world of EV.
Are you serious, Patrick? You were around in 1982 when everybody was saying there's not enough oil in the ground. There's not enough, we're going to run out of oil like any day now. They've been spouting that crap forever. And it's the same with these natural resources. Technology is going to solve that problem too, just like it solved all the other problems.
Okay. Well, the good news is I'm going to live long enough to say, JG, I told you so.
Yeah, that none of that has happened or will happen yet. So just hang on to your socks for that one. Okay, so we're done. Where do we go with this? That was a little. You missed a whole. That was a little OG wisdom right there that I just put on you. And so I'm glad that we're capturing this though. Yeah, so am I.
Mm-hmm.
Yeah, I like. At which point do you want me to bring this back up? Like, do you want me to bring this back up like in a short? Do you want me to wait a long time to bring this back up?
We can probably check in once a year.
Oh, for sure, absolutely. Okay, we will do that, Patrick. Now, where are we going with this? Where are we going next? You want to talk about? We should talk about you. Just a little side point, since it has no bearing on the conversation we just had. It's totally disconnected. Is the central banks buying up a ton of gold? Well, not buying up. I don't know what the hell are they buying it up? What are they doing?
Of course they buy it. They're loading up. Central banks around the world are loading up on gold. So there's two parts to this particular conversation, and they're loading up on gold. So that's just a flag. Okay, why would they do the most gold that they've done that they've bought since 1967? You got Qatar, you've got Turkey. I mean, you've got a number of central banks, some surprising ones that are buying tonnage of gold. So that to me is, central banks around the world saying they're concerned about some things. What exactly? Hard to say. Beyond inflation, it could be, the demise at some level, or, some shift in the reserve currency, as in the US dollar. Don't know. I mean, at some point they're hedging their bet. The bigger issue that I think we have to really point out or shine a light on, which is to say OSFI, the Office for the Superintendent for Financial, whatever it is, I never remember what it is, OSFI, who is the regulator for our banks here in Canada, and I think right around the world. But at the end of the day, OSFI's coming in and saying 6 Canadian banks, your major banks, you guys need to pump up your reserves. Now, this is because, and they state in their letter, to all of the banks, which is public, and we'll share it on the screen here. They're actually saying is that, given the amount of risk that there is in the market these days, we need you to make sure that you have a reserve.
Yeah,
buffer.
well, it makes sense. I mean, how much has interest rates gone up in the last 8 months? Like 16x or something like that. So yeah, definitely increases the risk to these lenders for sure in a big way. I can see it.
Yeah. 400 basis points. So there's a lot of central banks, and our banks here are having to, they're hedging their bets too, which is all to say that they're still nervous. So they don't have answers, and they're also hedging their bets and like we should as investors. We've been talking about that for a long time.
I just hope they're nervous enough to stop raising the effing rates. I hope they're that nervous.
Fired Tiff.
It all comes back to fired Tiff. The other thing to talk about, Patrick, is we're seeing some data coming out where home prices are starting to level off. We're not getting the decreases, the month-to-month decreases as much anymore. In fact, we got a little bit of a bump. These are national numbers. We hate national numbers. The point is even the averages are starting to average out now in terms of prices, not as big of decreases, and home sales starting to come up in terms of the numbers of home sales. So two good indicators that in October actually turned and might be pointing in the right direction now finally. So bit of good news.
Well, I think it's just more realistic. I think the challenge that we face is everybody who's coming off the highs of the February, March, April 2022, the anomaly of extremely high markets and the FOMO that created. And now there's a lot of talk because so many people are being beat up. Many speculators who got into the market planning to assign a deal or exit the deal at that time, they got caught and now they can't exit the deals, and property values have gone down and they can't get financing. Those kinds of things are happening. I think people who bought at that time, depending on what they did with their rate, are getting caught off guard if they got into a variable rate. And the next thing you know, their payment's higher than they anticipated, and depending on the timing of closing. So that's all kind of this, that's really operating, or it's driving the headlines these days in terms of that bad news. Now, for others, when we look at what has really happened, if we don't compare to that anomaly and we compare to pre-2020, like if you get into 2019, 2018, yes, Vancouver market and Toronto market, but we're still, when you look at most of the markets, we're still well above where the numbers were in terms of values. And if we were just looking at values, for example, Toronto and Vancouver maybe is an exception, but depends on the property type. That's all.
Let's talk about that for a second. So let's just say I take a sample of my properties, right? There isn't any property that has gone down, they haven't gone down at all, by the way, because they're backed by income. It's not just a home. It's got revenue attached to it. It's got cash flow attached to it, and they have not gone down. I'm just saying that my point is that you got to look, as we always talk about, Patrick, you got to look at the regions, but you also got to look at the specific property types. And the last thing, and this is the biggest caveat, is the expectation. Several of my properties, but let's just say one in particular that I got in mind. At one point, I could have probably sold it for $1 million, over $1 million. And I'm thinking, now that was asinine. I mean, there's no damn way. I knew it wasn't worth that. It was worth, it, and it's still, so in my guess, my point is that today that property, let's just say it's worth $850. It was worth $850, $875 last year. It's still worth $850, $875 this year. But I could have sold it in a moment in time for $1 million plus $1.1 million. If I get that number stuck in my head, I feel like I lost 200 grand. But that's not accurate, Patrick. And there's a lot of, and I know you know this, I'm preaching to the choir here, but the point is that there's a lot of investors, they look at that delta and they look at their feelings and they say, oh shit, I lost 200 grand.
No, you didn't. You didn't lose anything.
And I think that that's really important for investors to be grounded in the truth about these numbers.
Well, it goes back to, the conversations we've had many times, which is the wealth effect. When you have an unrealized gain, let's say a $200,000 gain on a piece of property, you're willing to go out there, spend money, and it's all really great. And when you have an unrealized capital loss, you're still, it shuts you down. Either way, you didn't have the capital gain, you didn't have the capital loss, but psychologically it beats you up. I think that, people are being really, really driven by the emotions that are, blaring out of the headlines and the social media and the Twitter sphere and LinkedIn, all the things that are happening out there. And I think it's hard to get past that. It's really an emotional roller coaster. And then on top of it, let's be real. If you took out a line of credit out for $100,000 or a couple $100,000 to renovate your house or to even invest in another piece of real estate, you're now paying double or even more on your line of credit payment. Those are real and those are painful, and that hurts. That's part of what pisses me off about Tiff Macklem, by the way. If he would have looked into the future, as much as he looked into the camera and says, we're not raising rates for a very long time until at least 2023, he could have looked into the camera and said, I see us raising rates. If you're in a variable rate, you might want to consider it. If you've got a line of credit or debt, you might want to see what you can do to bring it down. He could have given the same warning to people as he did on the other side of the equation. He didn't. I'm just giving that as an example. And, he didn't.
Yeah. No, that's fair. That's fair. Listen, that's fair what you just said about Tiff. I will challenge you, though, on what you said about listening to the headlines and it being difficult to control your emotions. No, it's not. No, it's not. You just, number one, you just can't be tuning into that crap and can't be buying into it. As a human being and as an investor, you have to have control of your own emotions. You have to have control of what goes into your mind. And hey, don't get me freaking. Don't going with this shit. You have it's very difficult. Give me a friggin' break. It's not difficult.
Listen, you keep in mind the headlines are primarily being driven by speculators. And speculators bought real estate because it was an emotional buy. It was FOMO. It was their friends, their neighbor, all these people saying, get rich, go buy a piece of this and assign it, and you're going to make nothing but money on it. And then they got caught. Those are conversations we've been having for 20 plus years. It's like musical chairs. It all works great until the music stops. And then the next thing you know, somebody's left without a chair. The point is that it is driven by emotion, and it's driven by the same people who made emotional decisions to invest and then using a strategy that they used. Now they're being caught. That's what's driving it, JG. So as much as you with your experience or mine with my experience, we deal with it. We're also in some cases, we're making bigger payments as well. But ultimately, the decisions we made weren't driven by emotion. Sometimes we gambled and we said, well, I don't think this and I don't think that, or I think this and I think that. But, we're not talking about the masses here.
Enough of that conversation. Let's move on.
Move on.
Let's two more topics. We're probably gone over time here, but I got two more topics I want to talk about. One is here's the question, call it. This is on video form forever. So make sure you make the right call. Ready?
Ready.
Will we go into recession?
Well, it's a bit of a loaded question. So my feeling right now today is that we're going to definitely slow down. I can't see a recession happening as I look into what's going on. I can definitely see a slowdown, but I'm also seeing employment remaining quite strong. And until I start to see that number, and here's what if I have a concern about recession, it's just that employment's a lagging number. So things could catch up, but I'm going to keep a close eye on what's happening in that labor market, because ultimately, if people are working, then the chances of a recession going deep are far more difficult to go there. So it's not that you can't have a recession with the lower unemployment, but you got to go a long ways from where we are today.
So at this point, you're predicting a soft landing. Is that what I'm hearing?
Softer landing, yes.
Softer landing. That's the new word on the street now. That's what people are using. It's funny because just a couple months ago, it was like nothing but hard landings. It was going to be unbelievable. The whole market was going to fall from underneath itself.
Well, that's okay.
Now we're in a soft landing.
Okay, but
which by the way, sorry, 1 sec. But by the way, it depends who you talk to. Talk to the friggin' investor that bought at the height of the real estate market or at the height of the stock market. They don't think this has been a soft landing. They think it's been a pretty damn hard landing. So it really depends on who you talk to. If you're employed and you've kept your job, you don't really have a whole lot of assets, you're just renting. Yeah, it's been a relatively smooth ride thus far. So my point is, I think it's a question of perspective. Although I think your call in general is accurate. I'm on board with you.
Okay, but here's some concerns. Okay, let put the underlying concerns that could skew that we got to keep an eye on. Number one, our exports, 75% of our exports are to the US. So we have to really pay attention to what's going on in the US. Now, there's lots of kind of debate about what's really going on economically in the US, but Canada exports 75% of their goods. We get a lot of dough coming out of the US. If they slow down, it's going to have a bigger impact on us for sure. This labor issue, if we don't get handled, it's going to have definitely an impact that can actually slow an economy down. Now, the other thing here that we can't step over is the fact that these interest rates, as much as we connect them to mortgages, businesses that need to capitalize in order to expand. And it's one of the things that's been lacking in Canada is businesses putting money into their own infrastructure and capitalizing their own improved equipment and upgrades has been slowing. And when you got interest rates that are this high, I say that, businesses are going to take a second look at wanting to capitalize and say, okay, let's make this investment into this in our own business infrastructure or equipment or whatever it might be to grow. So there are some kind of cautionary notes in all of that we have to keep an eye on.
Let me address a couple of things you said. Number one, you said it depends what happens to the US. I agree with that because they are such a huge part of our exports. I do agree with that. What's happening over there, that's for another show. Number two, if we got to fix our labor issues, you said there ain't no fixing these labor issues until the technology. I was going to call you honey. honey, Patrick. There's no fix.
Okay, sweetheart, move on.
Yeah, there's no fixing these labor issues. We're going to be in this state of labor for decades, not years, certainly not months, decades. That is how tight this labor market's going to be until technology can find some way to help. And it's the same with a lot of the other challenges we're having. So that's what I got to say about that.
Okay.
You're such a great guest on the show, Patrick.
Well, no, I mean, I get it. I don't know that I necessarily agree, but I do understand how you can come to that conclusion.
No, we just got to go drill more oil. You think that's your answer to everything? Drill more oil. Now I'm just jabbing to have some fun. Okay. Last question for today's show, which is, what are your thoughts on the new Real Estate Investing in Canada course we just released? Brand new course, all new, totally redesigned. What are your thoughts on it?
It's a piece of work that I'm the most proud of, I think, ever. I mean, I think we killed it. I think we did exactly what we wanted to do, which was walk potential real estate investors through 15 steps in detail. And I think we did it in a great way. I think it's relatively entertaining and interesting. We definitely brought the minutia and the detail to it so that people can feel confident as they've gone through those 15 steps. I think it's cool because you can enter the conversation wherever you are in your investing journey. So if you're just starting out, or if you've already accumulated some properties and you want to kind of go to the next level, I think we killed it. That's what I got to say.
I think the editing team did a fantastic job because that level of depth that we give in that course, it's not easy to give that amount of depth and that kind of content while it being short, punchy, entertaining, and also be so valuable that you want more. You want the handouts, you want the templates, you want the Excel documents, you want the Word documents, the PDFs, you want all that detail. So it's this really great balance between kind of, covering the entire system, but not going into so much depth that it takes months to cover this stuff. I mean, people can go from zero to sophisticated investors relatively quickly using this course. And what we love, Patrick, is when people that make mistakes, and we hear that all the time. Oh my gosh, I bought one piece of property, then I took the course. Boy, did I make so many mistakes. I'm so glad I learned from those mistakes and I learned from the course. Now I can go on my journey and not make those mistakes, because mistakes in real estate are very expensive.
The thing about what you just said, JG, that we need to shine a light on is all of the individuals or people that are struggling with the FOMO that they got caught up in and now are dealing with the fallout from those kind of mistakes. They wouldn't have made those mistakes if they would have been watching REIC and gone through the 15-step program, because you actually learn that that isn't the way you buy real estate. It's not the way you invest in real estate. As a matter of fact, it is the way you invest in real estate, but what they did was speculate. That's a differentiation, and they wouldn't probably be struggling with the things they are today.
I think you said it right. It's a program. We call it the Real Estate Investing in Canada course. It's much more than a course. It's a complete turnkey system. It's a program. It comes with all the handouts. I mean, it's really, really great. So huge fans. Very, very happy. Want to, shout out to the team because Patrick, it was months and months and months of editing. As good as you and I are on camera, I mean, it takes months to make us look good,
Well, if you could keep us focused for more than 60 seconds, it would be helpful.
That's why we like this show. We could just go, there's no editing. We just go wherever we want. All right, ladies and gentlemen, my sticky notes are done. Patrick, I got all that down to 2 sticky notes because that's how efficient and frugal we are on this show. Man, it's been a great year. So really looking forward to this break we're going to have, Patrick.
Well, we got Christmas coming up, and this is the last show as we go into the new year. So just take a minute to wish the whole team and you, JG, Merry Christmas. And to everybody who's listening, Merry Christmas. And we'll see you definitely in the new year. And enjoy.
Merry Christmas.
Ho, 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 ho.